How's it going, everyone? Just give me a moment while wait for Nick to sign in.
Oh,
Hey, Nick.
we got a party here.
What's that?
So we got some attendees already.
Yep.
Awesome.
I got you as host. Yeah, you want to tee things up?
Yeah, absolutely. First of all, welcome. Typically, these are held for Platinum members, private clients. This was sent out as per Dan's request to anybody else in the ecosystem that might benefit. It is Monday, which means it's seeking certainty. So just give you the big picture, kind of where you're at. Mondays, we do Seeking Certainty, where anytime we can, we update you on any of the disaster relief stuff, anything COVID related, anything shelter in place related. Those are the things that we'll try to make sure everybody's invited to. At worst, gets a replay to. And then Tuesday, Wednesday, Thursday, we have calls like this just for our private clients and Platinum members. It's Cash Flow Engineering Tuesday, Office Hours Wednesday. So any questions you have about business, we also give a little over-the-shoulder look inside baseball as to what we're doing and why. Thursday is revenue multiplication. So if you want to add streams of income and mitigate the risk involved and get really strategic about what you do next, we work through that on Thursdays. And then Fridays is called, we just started it last week, it's called What's Next? A lot of people are pivoting. A lot of people are trying to figure out their next marketing move. Do they hire somebody? Do they not hire somebody? How do we make those decisions? Just what's next? What do I do? How do I make the best decision for my business, for my life? And so now every Friday, we're going to go live and give you an over the shoulder. We're going to tell you what we're doing and answer questions about, hey, look, this is why we're doing this. This is what it might mean for you. Where are you at? It's a great conversation. So if you're interested in any of that and you're not already part of it, just let me know. Let Dan know. You can reply to any of our emails and we'll make sure that you get all caught up. But again, anytime there's an update about disaster relief or anything COVID related, we're going to try and get it out to you as soon as possible. And just this last week, over the weekend, there were some new updates and there's things that Dan wanted to share. So how this works is Dan's going to share whatever new update there is, whatever his interpretation of it is. And then down at the bottom, you're going to see two things. You're going to see chat and you're going to see Q&A. Say whatever you want in the chat. We might respond to it, but it's not going to be super intentional or deliberate. If you have a particular question, drop it in the Q&A and then give us some context because we're going to circle back at the end. So it's not like, what do you mean by that? Because we're not going to remember what we were talking about. So say, hey, what do you mean when you said ABC about XYZ? Okay, so do your best in the chat. And we'll do our best at the end, if time allows, to circle back and get to your questions. If we run out of time, I'll let you know how you can submit them, and we can still do our best to address them, whether it be a video we send out or whatever. So that being said, I'll let Dan kind of update us on some of the stuff that he sees regarding the payroll protection program. I guess there's been some interesting stuff about how much of it is taxable or how they're doing that. So I'll let Dan go ahead and share and then give his interpretation, and then we'll dive into questions if allowed, if time allows.
Cool. Thanks, Nick. Can you hear me okay?
Yeah, I got you.
All right. Let me know if there ends up being any background noise because I've got a little one over there on an iPad. So, no. So with that, I guess there's two things that I wanted to talk about. One is the IRS notice that came out Thursday night regarding eliminating tax deductions for any expenses that go into the loan forgiveness. So as you may recall, that any loan, any portion of the PPP loan that's forgiven is tax-free, and that was written into the CARES Act. And that's an exception to just the general rule that anytime you have, the general rule is if debt is forgiven, that's taxable unless there's an exception. In this case, the CARES Act provided an exception that said that any PPP related loans that are forgiven will be non-taxable. But then the IRS came out with a notice on Thursday night that said, well, any of the expenses that go into the loan forgiveness are non-deductible. And so what that means is while the forgiveness of the loan is tax-free, you don't get to use the wages as a tax deduction, interest, utilities, rent, etc. So effectively what that does is it basically converts the loan to being the equivalent of revenues. And so in other words, Jeff says he's having a hard time hearing me. Can you hear me better?
Yeah, I got you fine.
Move my mic a little closer. Jerry, you cannot hear me? Or you can hear me? All right, well, hopefully everyone can hear me, and if not, yeah, I'll try to project my voice more.
Yeah.
So I guess just to repeat, the PPP loan forgiveness in and of itself is not taxable, but the expenses that you use to determine the forgiveness are no longer a tax deduction. So we end up basically in the place where the loan is the equivalent of revenues rather than the equivalent of tax-free profits. So what does that really mean? What that means is kind of the drumbeat that I've been on for a while, which is that we don't just want to spend the loan for the sake of having it forgiven, because we have this cash. And if we take this cash and we pay it towards expenses that we weren't planning on spending otherwise, then the potential, the outcome of that is, yes, the loan is forgiven. That's great, but we don't have the cash anymore. And the expenses that we paid out are no longer a tax deduction. So we don't necessarily want to just chase forgiveness for forgiveness sake. And we can go, but before we get into that more, the question, and I see a lot of them in the Q&A, is around how do we actually determine the forgiveness? So, so I built you guys a spreadsheet for all that. So let me do my screen share thing. Nick, can you see that okay?
Yep, we got a spreadsheet. You're getting good.
We've got a spreadsheet, yep. So there's multiple steps to it. And this is all modeled off of what the AICPA, so the American Institute of Certified Public Accountants, put this together, this multi-step process. And I took that and I converted it into a spreadsheet. So step one is, let's just say we got to figure out what our loan amount was. So let's just call it 60 grand. So we put that in and then put in the loan origination date and say that's 5/4/2020. Really the relevance of the origination date is that the 8 weeks then that follow, I'll fix my spelling mistake as we go. The 8 weeks that follow from the date of origination or where the qualifying expenses count towards this calculation. So what we need to do first is we have to figure out the calculate payroll costs for forgiveness floor. So what does that mean? Well, what it means is that payroll has to be at least 75% of the total expenses. So if payroll were 60 grand, then that's 100%, and we don't have an adjustment at all. Like we're good. But say that payroll was 40,000 and our other qualifying expenses, and these are things like rent, utilities, interest, those are our other qualifying expenses. Well, of the 60 grand, so it still adds up to 60, but it's over 25%. And so we can only, qualifying expenses can only be up to 25% of the total forgiveness amount. And so what that means is that we have to adjust down the qualifying expenses so that they're not more than 25%. So that means initially out of this total, only $53,333 is going to be forgivable, even though we've got 60,000 worth of expenses. And so if you want to know what goes into payroll, I included some comments here. It's the same stuff that went into determining payroll when you term of the loan to begin with. Other qualifying expenses, it's rent, interest, utilities, etc. But the caveat now is that as long as it was in service prior to February 15th. So if you went out and you entered into a new lease agreement, added some new utilities after the fact, etc. Now the clarification is that's not going to count. So it needed to already be in service. So if we just play with these numbers a little bit more, if this were 10 grand, that's 20%. So there's no reduction. However, the total is less than 60. So Nick, any questions on that?
No, that makes sense to me. Regarding this in particular, nothing's come in about this.
Okay, cool. All right. So then we have to look at whether or not there's been a change in our FTE. So we need to look at what the FTE were, full-time equivalent employee, during this 8-week period. And so say that it was 8. And what we had in the previous comparison period, and there's a couple of different periods that you can look at, basically last year, the average FTE for last year, or the period from January 1st through February 29th. So you can choose whichever one's going to be most favorable. So if the average FTE during the period that you're choosing for comparison purposes was 8, there's no reduction. If it was 7, there's no reduction because you hired more. But if there's 10, there's going to be a 20% reduction. That's a reduction applied to the number up here. Okay, so basically, if this is limited, then it's going to be a further limitation based off FTE here. Then we get down to step 3, which is, do we reduce anyone's wages by more than 25%? And these are for employees who make less than 100 grand. If someone made more than 100 grand and you reduce them by more than 25%, there's no add back for that. But you need to look at all of the employees who their salaries were reduced by more than 25% and say that reduction totaled to 10 grand. That reduction, that's going to reduce the forgivable loan further from 40 grand to 30 grand. But then we have this final step, which is, and there's still limited guidance on this, which is, well, what about if we restored our full-time employee salary by June, or we added back all of our FTE by June 30th, and or we restored people's salaries who were reduced by more than 25%. So if you restored everyone's salary, or at least you restored them so that the reduction wasn't more than 25%, and you got your FTE back to whatever the comparison period was, and your restore criteria is met, then the number becomes 50 grand. Step 1. So basically we get to throw out step 2 and step 3 if we restore FTE by June 30th and restore the salaries. If we only partially restore, then we add back the equivalent. So if we, instead of wages being reduced by 10 grand, it was 5 grand, well, we're going to add, instead of having the forgivable loan be 30 grand, it's going to be 35 grand. And so to the extent to which we restore wages, we get to add back that reduction. And then to the extent to which we get FTE back to the comparable period, we get to add that back as well. So there's multiple layers to this. It's not a straight line. It's clearly multivariable. So with that, I guess what questions do we have, Nick?
Yep, I'll start. I think you sound quiet because I am so close to my microphone that people adjust their volume for me. So I think we solved that.
Gotcha.
Yeah, so I see a bunch of questions and some of them are redundant. So we'll just plow through this real quick. Requirements state calculations are based on payroll average for 8 weeks after loan. Is this based upon actual days worked or payday dates?
So as I understand it, currently it's based off what you paid during the 8-week period. irrespective of when it was worked. It's when was it paid out, and was it paid out during the 8-week period? And the ACPA, again, the American Institute of Certified Public Accountants, have been pushing back and have requested some updates to the criteria, because based off when your pay dates are and when the loan gets originated, you could be adversely affected or positively affected. And so the argument is that we should essentially get to choose an 8-week period that's going to be most representationally faithful of your business, rather than getting adversely affected by the actual loan origination date. So that request is in as of, I think, early last week, but as of right now, it's just based off of what you pay out during that 8-week period.
Cool. Just a reminder, drop it in the Q&A. I see the chat moving. Get in the Q&A so we're looking at it. In one case, it says you have till June 1st to hire back staff, but also says you need to have an average number of employees over the 8 weeks to equal the January/February average. Sounds contradictory. If I hire back furloughed staff, on average, it will still not be 100% because of the lost week or two.
Yeah. So, good point, Alistair. Basically, if you go back to this methodology, you calculate these decreases. And what was the decrease? Were the wages restored? And then to the extent to which you actually bring them back by June 30th, then you get to ignore these two steps.
Cool. Alistair, go ahead and let us know if that makes sense. Another question from Alistair. What dictates full-time? If they come back 75% on rotation, in order to maintain distancing, would we remain compliant? There's another question along the lines that says, is there a spreadsheet, or is there a way to calculate FTE?
I can add in a piece to calculate FTE. So I'll do that. Again, AICPA, we've submitted a request to the SBA and to Congress to take into account the fact that there are these social distancing issues in place, and some businesses are shut down because of shelter in place. And so we've been petitioning for exceptions to this policy or modifications based off industry. But as of right now, the way that it's written is the conventional calculation for FTE, which is based off 40 hours per week.
Cool. This is another good one. Alistair's a thinker, so he's always got the good questions. They have a staff member that was pre-scheduled to reduce to part-time, had nothing to do with COVID. He's 62, wanted the part-time job and all that stuff. So they moved him to 2/3 his prior salary. Should he be moved back to 75% to stay compliant? Or is there a way to document that this was not Corona related, and keeping him as opposed to furloughing?
Yeah, nothing to indicate that if it was pre-coronavirus or not, if you reduce their salary by more than 25% during the 8-week period, then you're going to be reduced. So unfortunate, I guess, situation with respect to that employee, but based off the way that it's written right now, your forgiveness would be reduced unless you increase their salary by June 30th back to be 75% or more.
Got it. So John here, Post Alley Pizza received their PPP on Friday. So congratulations. I know some people are still waiting. Questions, time constraints. Is it correct that the amount to be forgiven is solely on the next 8 weeks of payroll, rent, utilities? Hold on. Scroll there. Mortgage expenses. Let me change this so it stops. And any amount not spent in that period is not forgiven at 1% interest?
Yeah, so is it correct that the amount to be forgiven is based solely on the next 8 weeks of payroll? Yes, currently. We're hoping to get some modifications industry specific or less contingent on the origination date and more in alignment with the start of your payroll cycle plus 8 weeks. But to the extent to which it's not forgiven, you've got 2 years to pay it back at 1%. Uh, are there any restrictions on what we may spend any remaining amount on, understanding this amount will not be forgiven, like paying down our credit card debt? Yeah, no restrictions. In fact, this just goes back to business need and whether or not we're chasing our forgiveness and paying things out that perhaps are better. A better use case would be to recapitalize the business and pay down some debt that's at a higher rate, rather than maybe paying employees who aren't working for the sake of having it forgiven. Again, if you pay those employees, then that will not be a tax deduction. So you're going to be incurring FICA taxes, and the employer portion of FICA taxes is not part of the forgiveness calculation. So you pay out this employee who's not working for the sake of forgiveness, you're going to be at least upside down the 7.65% employer portion of FICA taxes, plus any FUTA, federal unemployment tax, that you wouldn't otherwise pay. So economically, potentially worse off by paying out payroll that you wouldn't have otherwise spent. And then he says, I recall a stipulation that employees hired back and paid with forgivable PPP must remain on payroll through October 20th. Is that correct? Is that date when the amount is forgiven? Yeah, good question. I don't know exactly how the documentation cycle is going to work. If it's going to be, at 8 weeks you submit all your documentation, or if there's going to be a waiting period. So I don't know the answer to that yet. But we'll certainly do another update on this once we have that.
Yep. Mondays and Fridays. So anybody potentially Wednesdays for Platinum members and clients. Claire says, I'm waiting on answers for the analytics I signed up for. I was referred to by semi-retired MD, which are friends of Dan's. I'm concerned that the IRS loan/grants will expire while I'm waiting.
Yeah, Claire, I'll have someone follow up with you after the meeting.
Megan has been participating lately greatly. For sole proprietorships or partnerships, the owner pay isn't expensed anyway. So in effect, is it not taxable?
Yeah, sole proprietors, it's an interesting situation insofar as if you're a Schedule C sole proprietorship, then your forgiveness calculation is based off last year. So if you don't have profits and all that, you still get the look back. So your forgiveness is pretty favorable in that sense. And you're right. Yeah, there isn't a deduction for Schedule C profits. As a partnership, there is a deduction for guaranteed payments. So I think you'd lose out on the guaranteed payments deduction.
Is the interest on the loan part of the forgivable expense calculation?
I don't think so. No, because it had to be in place by February 15th or prior.
What if there are only 2 employees that can work? I am the owner and I have a manager. No one wants to work because they must stay home. Also, they are not privy to our emails, etc.
Yeah, so it goes back to this Excel spreadsheet calculation. So you look at how many employees. First, you'd go through the calculation and to see how much payroll did you pay out during the period compared to other qualifying expenses. What is that ratio? And reduce accordingly so that qualifying expenses aren't more than 25%. And then you got this reduction where it's 2 employees compared to whatever the previous period is. And the previous period was 20, then the reduction is going to be pretty significant. Again, this is where the AICPA has been pushing back on the way that this was rolled out, the way the CARES Act was written, because for a lot of businesses, they simply can't restore their workforce because of shelter in place. So as it stands right now, the way it's written, you'd have very little of the loan forgiven. But hopefully in the next week or two, we'll have some pivot that adjusts things accordingly. I say hopefully because it would probably have to be a modification to the actual act itself, which would require Congress, et cetera.
I was sent an unsolicited grant of $6,600 to my MDPA and $1,200 to my personal account. Are those taxable as income?
So the 1,200, was that the stimulus check? If that was the stimulus check, then that's non-taxable. That's a tax credit in advance on a credit that you would otherwise get when you file your 2021 or your 2020 tax return next year. In terms of the unsolicited grant, can you tell me who that came from? So give me some more details on that, and I'll let you know. Ali asked, does originated mean the same as deposited? I signed the docs, but didn't actually receive the money until 1.5 weeks later. So currently the way that it's written is that originated means the day the loan was completed, not the day it was deposited. So as it stands currently, the 8 weeks would start, unfortunately for you, 1.5 weeks before you got the funds. Hopefully we'll have an update.
Cool. Can I combine part-time employees into one full-time employee?
Yeah. Yep. So the way it's written currently, FTE calculation would be adding up all of the hours divided by 40 hours per week. So over an 8-week period, there'd be divided by 320, 40 times 8. And so we just take the total hours divided by 320, and that would equal the FTE amount. So you could have multiple people that add up to one FTE.
Ali is curious if you know which documents the banks will be asking for.
Yeah, so they're going to be asking for payroll records, and they're also going to be asking for like invoices and canceled checks as it relates to mortgage interest, rent, utilities. Interestingly, well, we've been saying, and I don't know if this is up on the, I guess I've got things blocking the screen with the share, but AICPA said the same thing we were saying a few weeks ago, which is maintaining a separate bank account can probably assist you in the tracking. So if you set up a separate account that's only used for paying out PPP related expenses, that's going to make your life, I think, a lot easier.
Awesome. Jeff R. asks, are there any restrictions in respect to increasing a person's salary during the coverage period? So can they go from 40 grand to 75 during the coverage period?
Yeah, so I think they can go from 40 grand to 75 grand. If their annualized salary goes above 100, you're going to be limited. You're going to be reduced down to if their annualized salary was 100 or less. But you can increase their salary. It still is going to go back to, so you'd have this first salary calculation, and that might help you. But then if your FTE has been reduced, you'll still have some reduction. So potentially doesn't necessarily benefit you.
Jennifer has a great question, one of our favorite kinds. Is there a deadline to give the money back if you do not need it? Applied just in case, received a huge amount, but, and this is the good part, business is still thriving. Not sure if I should use it towards PR and ask forgiveness or keep it as a low % loan and use it for growing the business.
Yeah, I apologize. I'm fuzzy a little bit on when the interest starts accruing. I think it's 6 months after the date of origination. So I'm a little bit fuzzy on that. Someone can correct me if I'm wrong in here. But I would imagine if you paid it back before the loan started accruing, then you'd be essentially in the same place you were before with no cost to you. 1% interest. This is somewhat a personal preference around your tolerance to holding debt and also back to your overall priorities. But 1% is about as cheap as you can get. So to the extent to which it makes sense to fund PR and other things as part of your overall business plan, then I'd probably hang on to it.
Yep. Cool. Amber, don't quite understand the June 30th date. Does that mean I can reduce salaries prior to June 30th, but then bring back to 100% in July and get the full benefit?
If you bring them back fully restored by June 30th, so on or before June 30th, the way it's written right now is that you would not be reduced using steps 2 and 3. You'd still have step 1, where we have to look at the ratio of payroll to qualifying expenses. but you wouldn't have these additional reductions, is how I understand it.
Cool. Can staff be paid as contractors and still fulfill the payroll qualifications? This one came up a ton
No.
earlier.
Yeah. And I'll just again bring up the AICPA. Additional points to consider when tracking payroll costs. Independent contractors are not included.
Since I have 2 different businesses and only part-time employees, am I eligible for the loans? Can I get any support if my tenant cannot pay rent?
So yes, you can. The calculation for the PPP is based off your payroll. So irrespective of whether they're part-time or full-time, you would just take your average payroll costs for 2019 plus the retirement benefits plus the state income taxes, and that would determine your eligible loan amount times 2.5. And so you're still eligible. You just because they're all part-time employees, and determining FTE is we're going to be using their we're going to take total hours divided by 40 hours, basically the equivalent of 40 hours per week. So you might have 5 employees, but as a full-time equivalent, that might account for 1 or 2. But yeah, you'll still qualify based off using the payroll amounts.
Cool. Somebody on maternity leave. This is a great question because I actually know I have a bunch of clients that are have employees on maternity leave right now. Do they count towards a full-time employee?
Yeah, I think you're still using sick time, family medical leave, etc. Those are all hours that you would include.
Is your overall forgiveness that gets reduced, or just the forgiveness for that employee?
Can you clarify what you mean by that, Alistair? Or Nick, do you understand that question?
I think in the worksheet here, I'll let him clarify. So we'll circle back. Am I paying my employees while they are on unemployment and not working?
Well, if you're paying them, they couldn't be on unemployment. But if you're paying them, then you're going to increase the amount of the loan that's going to be forgiven, but you're going to still be upside down from an overall cash flow perspective, because you're going to have to pay the employer portion of FICA taxes, as well as the FUTA taxes. Let's just call it 8%. So there's whatever you pay out times 8%. That's not part of the forgiveness calculation. So cash flow wise, you're economically worse off in that scenario. So yeah, you'll get it forgiven, but at an out-of-pocket cost to you of that 8% of their wages. So it's somewhat of a gut check on whether or not it's worth it to you from a business perspective to be out of pocket that amount. If not, the worst case scenario is this becomes a 1% loan that you could choose to pay back later.
Cool. Losing questions here. Question box isn't big enough. If you receive the grant, the 10K grant, and you received funding for PPP, do you have to deduct the grant from the payroll protection program, thus becoming a loan and no longer a grant?
I don't think so. I think the grant is separate.
That's what I would think. What are you saying in relation to Congress correcting this non-intentional guidance from the IRS?
Sorry, I had to sneeze for a moment. So wanted to make sure that that wasn't caught on video. I don't have an opinion on that, Alistair.
1099, we talked about this. 1099 contractors are not part of the forgivable amount, correct?
Not part. Yep, not considered wages.
Carrie, is a great question, and I just want to say it out loud for everybody here. Do you have any banks that are taking PPP apps? Both of my banks don't have a new link yet after they closed the first round, and I believe Dan did. He may still have some fast tracks to banks that are accepting them.
Yeah, so I got an email from Umpqua Bank, which is a regional bank, uh, which sent me an email on Friday. They processed several thousand, maybe 10,000 applications, and they sent me a note saying, basically, we've processed all of our applications, so we're accepting more now. So that's Umpqua Bank. I'll post in the comments. Umpqua Bank, um, Continental Bank of Utah, uh, and uh, I know those two have been pretty successful for folks in terms of getting their loans processed. And if you're waiting on B of A, Chase, Wells Fargo, or one of these big national banks, and that's the only place you've applied, apply at a regional bank. I know that I've had some friends who've applied at like a bank in Nebraska, for example, and they got approved in 15 minutes, as in from the time they submitted their application to when they heard back was 15 minutes. So don't wait. Don't just wait for one of the big national banks to get back to you.
So question here. So I cannot pay myself for all the extra hours I have put in since I am the owner. Question.
You're capped at 100 grand annualized salary, so you can pay yourself extra basically from whatever your current is up to the equivalent of 100,000 annualized, or basically $8,333 per month. So if we assume 2 months, or that 8 weeks is basically the equivalent of 2 months, then you could pay yourself a maximum of $16,666, and that would be forgiven.
Cool. Allie just wants to confirm. Oh, lost it again. The employee payroll amount is only calculated by employee side FICA and pay, plus all those fancy letters, not employer side.
Yeah. So employee FICA taxes is part of gross pay. Income taxes withheld from their check is part of gross pay as well. So whatever their gross salary is, that's already baked in, plus the other things that are state income tax, unemployment, workers' comp, L&I, family medical leave, etc. All those state taxes that are applied to payroll, those are included both in terms of determining the average monthly payroll amount and determining the forgiveness. What's not included are the employer FICA taxes, so the federal payroll taxes and the federal unemployment tax.
All right. Looks like Claire clarified. IRS is where she got the unsolicited grant, is my assumption.
We'll probably have to talk about that offline. That I'm not familiar with what that might be.
The FTE comparison, understanding that it's still in flux, but is it currently the February 18th date, 19 or 20 or quarter 1, 20?
Yeah, so you get to use. Let me pull it up exactly so I quote the right amount. But you get to choose either last year or this year for determining the FTE comparison period. So it's either, let's see. So either you could use February 15th, 19 through 6/30, or you could use I believe the entire year, or you can use 1/1/20 this year through 2/29/2020. I'll include this in the workbook as well, and paste these in the comments.
Perfect. Because the next question is, can you share your spreadsheet, being the workbook?
Yeah, we'll email it
out. If you're already opted in for stuff, I can probably get out to you today. Otherwise, it'll have to go out tomorrow.
Yeah. Can we talk about the opt-in for a second, Nick?
Yep.
So we were doing these daily calls, and we were sending the invite out to everybody. So everyone that's sort of on our email list, plus nth degree CPA tax clients. And I got a bunch of angry emails from nth degree CPA's tax clients, literally telling me to stop being so helpful. And some people saying they were going to fire us if we continued to send emails to them regarding coronavirus related stuff. So then we sent a few emails. Well, one, we removed those people from our list, but then there were 1 or 2 emails that may have ended up in your spam folder where we said, if you're an nth degree CPA's client and you want to continue to get these notices, you need to opt in. And so if you haven't seen the emails recently about our daily calls, it's because you need to opt in. So I think Nick just gave the link.
Either one of those will, the workbook has the old version of the workbook, but if you're on that list, I'll mail you the new one by end of day today.
Cool.
And yeah, so we're permission based. We really want to be helpful, but we want to make sure we have your permission to do so first.
That's right. Yep. So make sure you're opted in if you're an nth degree CPA's client, so you get the invites.
Yep. I read that 30 hours is the divisor. I'm assuming it's talking about full time.
Yeah, I'll go back. I'll check.
Cool. Claire is going to have a private conversation lined up with you, so we'll address that one. Can you prepay the rent for the year during the 8 weeks and have it be forgivable?
That's a good question, Derek. I would, based off the way it's written currently, I think the answer is yes. And I've got a number of like strategies that I've been kicking around, such as, if you use a home office and you're being reimbursed and you have been being reimbursed for rent and utilities, is that includable? I would think yes. If you're using the Augusta loophole and you've been paying rent and that was in place before February 15th, then I would think the answer would be yes for that. If you're trying to get to FTE amounts and you add your spouse and your kids who are providing meaningful work, and at least, depending on the state, but at least in most states, 7 years or older, then I would think they would go into the FTE calculation. I don't see anything that excludes related parties from being added back as FTEs and being included in the calculation. But those are all things that we just have very little guidance. The same thing, and so I've been a little bit gun shy, frankly, because when we look back to the 20% pass-through deduction that was part of the Tax Reform Act, there are a bunch of folks, and so if you're familiar with this 20% pass-through deduction, basically there was this potential limitation there's this limitation based off if you're a service-based business versus non-service. And there are specific companies that are listed as service-based businesses, like CPAs, attorneys, et cetera. And then there was kind of this broad bucket that was the remainder. And then non-service wasn't subject to the same amount of limitations. Very little guidance. And so for 6 months after this came out, there were a bunch of people scheming about, well, what if I spin off part of my business and shift income elsewhere? And if I own the building, can I convert myself to more of a property management company that's not going to be excluded, so on and so forth. And so a lot of folks were kind of reorganizing their businesses and doing all this stuff to try to move from being service to non-service. Anyhow, then the regulations came out and all of that strategizing and stuff was effectively eliminated. And so I'm a little bit gun shy to tell folks to execute on things like the Augusta loophole, home office in particular, because frankly, Nolan, my business partner, and I discussed the possibility of adding our spouses and kids on payroll. And we think there's some justification for doing that. But absent the guidance specifically about this, or at least speaking to related parties and otherwise, you just run the risk that you pay all this out, you pay the FICA taxes, and it's not part of the forgiveness. So unfortunately, that leaves people kind of in the lurch, frankly, and hoping that in the next couple of weeks, we're going to get more specific guidance. But because of the fact that there are non-forgivable portions of payroll, the FICA taxes that the employer pays, so that's out of pocket to you, and the fact that the loan is basically revenue now when you have to exclude the expenses as a tax deduction, then I'm a little bit gun shy to tell people to execute on that until we get more specific guidance that hopefully happens in the next couple of weeks. So that's a little bit of a ramble, but
I think we know, I think we covered this before, but um, the SBA disaster relief that was previously 10K and then it became 1K per employee, is it forgivable?
Yeah, it's supposed to be essentially a grant.
Okay. And if not, how and when do we pay it back? But my assumption is if it's a grant, then
Yeah, my assumption as well is it's a grant. You don't have to pay it back.
yeah. PPP loans are limited to one per applicant. How does an applicant, does it mean legal entity or person, individual, business
Yeah,
owner?
legal entity.
Uh,
And when you
it
fill
would
it
be-
out, there is a section where you're supposed to list the affiliated businesses. And there was some discussion about how there would be some affiliate level limitations, but I haven't seen that applied. I know of several folks who've got 5 or 6 businesses all with common ownership, and each business was approved.
my assumption is it's by taxpayer identification number, right? So if each business has its own EIN, then it would be you could have one applicant per EIN.
One applicant per EIN.
Okay. And I only brought that up because some people might be sole proprietorship and then their social security number would be the one.
Yeah.
In relation to the question about the reduction, the pre-corona, does it fall into step 2 and step 3 on that front, or only step 3? So this is in regards to the guy that's getting paid 66% of what he was, but it was pre-planned. It was before COVID. Step 2 or step 3, or both?
I think it would just fall into step 2.
Can we apply for multiple PPP loans? I think we talked about that.
Per EIN.
Sole proprietor capped at 100K. Does that mean I could only expect 16,666 to be forgiven? I got a PPP of 20.8K. And then there's some explanation about how we got it.
Yeah, that's awesome that you got funded in 4 business days. That's great. So in terms of the amount that you're going to be capped, so I'm just going to do the math here real quick. So 16,666 divided by 20,800, that's 80%. So you're above the 75% cap. So you could, the remaining difference between the 20,800 that you got funded and the 16,666 could go to rent, utilities, and interest on anything that was in place February 15th and prior.
Cool. So keep losing this here. My understanding is that seasonal employers have to choose the 2019 comparison period. Any guidance on how the SBA will determine the definition of seasonal employer?
I would imagine it's based off the NAICS code. But I haven't seen that specific guidance.
All right. Started my company in June of 19, so I only had 6 months of payroll on my W-3. Is it legit under PPP to divide the 2019 W-3 total by 6 to determine monthly payroll?
Yeah, that's what I would do.
Perfect.
Yeah, I think that makes sense, Joe.
Can rehire only a portion of my full-time employees and increase their salary and still get the new salaries forgiven if I don't exceed the 75% threshold? That's a question mark. Also, it sounded like you said owner salaries could be forgiven if they had not been laid off.
So yeah, owner salaries will go into the calculation along with everyone else's salary. We kind of have to, Amber, we kind of have to step through it piece by piece. So step 1 would be what's the total amount of payroll paid out during the 8-week period, and did anyone have an annualized salary of more than 100,000? If so, we got to reduce them down so that their annualized salary would be at 100. So we take that total amount. That would include your salary, all the owner's salary, and then we have to look at what was the total FTE during the period compared to a comparison. And so whatever, we start with that total and then we have to reduce it based off FTE. And then we have to reduce it by those that were whose salaries were decreased by 25%. So fortunately, you got to kind of go through each piece, and I'll send you the workbook so you can put in the actual calculations, but it really is do step one, then go on to step two, then on to step three. And so you can kind of play with it and see how changing people's salaries will impact the amount of the forgiveness.
If you have multiple businesses, can you pay yourself out of each entity? Also, if they are seasonal, so you have no full-time or FFE in the first part of the year, how would that play into the calculation?
If you have multiple businesses, can you pay yourself out of each entity? Haven't seen any guidance on that. So not sure currently. It's broad enough that I would think that the answer would be yes, but that's speculation. Again, I haven't seen anything on related party stuff and how that comes into play, but I would think probably the answer is yes. What was the other piece of the question?
What's that?
What was the other piece of the question? Sorry, I got moved to,
if you're a seasonal business, yeah.
Then you got to use the period of February 15th through June 30th to determine FTE. Okay. The grant, that 1,000 per FTE, I believe that's non-taxable.
Another question. Is there any forgiveness restriction on paying an owner bonuses through payroll during the coverage period?
Not beyond it would be part of that annualized 100,000 piece.
Cool. The grant never applied, applied but never received. Will it just show up at some point, or do I need to follow up with the SBA? You mentioned it changing to 1K per employee. How do I take advantage of that?
Yeah, so since you've got 24 employees, then you'd be capped at 10 grand. So unfortunately, you wouldn't get up to 24,000. Basically, what happened was for folks who applied who just have 2 employees, you're going to be limited to 2 grand. Initially, it seemed like everyone was going to get 10. So it was more negatively affecting for people who have less than 10 employees than folks who have more than 10 employees. At some point, it will just show up, you know. So I'd go back and check your bank account and see if maybe it's posted. In terms of how you follow up with the SBA, there really isn't a mechanism to do that.
Yeah, that's been a pain for a lot of people trying to get in touch with them. We'll wrap up with this question, and then we'll do a final wrap up. This is a perfect question to end it on. Can I use the PPP to pay nth degree?
I swear I didn't put her up to that. You can use the funds to pay anything that you want, but if it's not for payroll or interest or rent or utilities, it will not be forgiven. So you can use the funds for anything. It just will become a loan at 1%.
Yeah, and nth degree does not fall into any of those particular categories. Can I claim PUA?
What is PUA? Is that pandemic unemployment assistance, I'm assuming? Yeah, I would apply for that.
Cool. So we'll wrap up there. Coming up on the hour here. Thank you guys for showing up, asking good questions. Everybody benefits. I love that Alistair dumps questions because we all got the same ones. Again, I drop the links if you go to cfeclass.com/workbook or cfeclass.com/oasis to get on the list. You'll get the updates. If you want to stop getting the updates, there's a little button that says unsubscribe. Just click that. And you don't have to send an email mad at Dan for being helpful. If you have any questions, yeah, you can.
List.
If you have any questions, what you can do is you can reply. You can just, for some reason, something doesn't make sense. You don't know where you're at. You don't know where something is. Just reply to the email. Within 24 hours, we'll have somebody reply to you. And tomorrow, I think we're going to break down 7 steps for immediate profit. I'm not really sure what the name is, but we're going to say, hey, here's the 7 things you can do right now to find these pockets of profit in your business. Is that correct? That's what we're doing tomorrow?
Yep.
So if you're interested in that, just make sure that you're in the CFE cash flow engineering Platinum, Cash Flow Engineering Platinum. You go to cfeclass.com / letter if you want to read about it. So you don't have to watch any videos or anything. You just read about it. And we'll get this email out. I'll get this replay out as soon as it renders, as soon as it's ready, and I'll get the workbook from Dan so I can make sure that's attached.
Yep. Yeah, and if you don't see it later today, just check your spam folder.
Yep.
So we'll have the replay, and then we'll have the workbook too.
Perfect. And we'll see you guys. If we see you tomorrow, we'll see you tomorrow. If not, show up Friday. I'll drop this link for you all too. Friday is free. A little bit more into business development stuff, what we're doing, what we recommend other people do, and a little bit of hopefully free time for some questions. So you can jump on there. If you're not in the Platinum program, Friday is a good chance to kind of see what we're doing a little bit.
Yep. Cool.
All right.
Yeah, take care.